If I had my first $500 to invest and I had to start completely from scratch, here's exactly what I would do. Because most beginners immediately ask, well, what stock should I buy? Well, you have choices: Apple, Nvidia, Tesla, or whatever stock your homeboy told you about. It's none of that. Because picking a stock is not the first decision that you guys need to make. And before this video is over, I'm gonna pull out my own phone, put up $500 on my own bread. I'm gonna make the investment with y'all step by step. So here's the game plan. All right, so first, I'm gonna show you why we invested all and how something as small as $500 can become the beginning of something much bigger. Second, we're gonna figure out where your money actually goes when you start investing. Third, I'll show you what you're actually buying when you hear the words like stocks, ETFs, and index funds. Fourth, we're gonna talk about how you keep investing without trying to time the market. And finally, we're gonna pull out the phone. I'm gonna put up the $500 and I'm gonna show you guys how to actually invest it. So when this video is over, you won't just understand investing, you'll know exactly how to start. Before we talk about stocks, let's answer the most basic question. Why should we invest it all? Because technically you could take this same $500, you could put it in your bank account and just leave it there. And look, if this $500 is your rent money, your light bill, or maybe even like your emergency stash, you might want to leave it alone. I'm talking about the money you actually can afford to leave invested for a long period of time. Because investing ain't really about what happens to your money next Tuesday, it's about what can happen to your money over years. And that's where compounding starts changing the game. One of my favorite investors, Warren Buffett, probably one of the richest investors, and he has something to say about compounding. Y'all listen to this.
Charlie always describes compound interest as being like, being at the top of a very large hill with wet snow and starting with a snowball and getting it rolling down a hill.
And that's literally what we're trying to build. See, at first, your snowball, it ain't nothing, it's tiny. But when you keep rolling it, it picks up a little more snow. And now the ball becomes bigger. So the next time you roll it, it can pick up even more. That's what investors like to call compounding. See, your money makes money, and then the money it made has the opportunity to make even more money. And now let's go ahead and talk about my thumbnail, all right? $500 to $1 million, but I need y'all to understand something. I'm not just saying if you put $500 into one stock, you go to sleep and then you're gonna wake up a millionaire. Is somebody promising y'all that? Y'all need to chunk deuce and just dip out, right? Because that ain't how it works. Let's just say you start with $500 and then after that you decide you want to put $300 a month into your investment account. And just for illustration, let's assume that your investment account averages about 8% over 40 years. You know what that math gets you to? About $1 million. Now listen to me, that 8% is just an example. It ain't guaranteed. There's gonna be some good times and there's gonna be some bad times. The point is just showing you what can happen when you combine money, consistency, and time. Any of those factors can change the equation, right? So let's say that you put more than $300 in per month. You would get to that $1 million quicker if everything else stays the same. Let's say that your frequency goes up. Instead of you doing $300 every month, you go $300 every 2 weeks. Then obviously it will be impacted. And then time, let's say that you want to invest more than 40 years. If you want to invest for 50 years, well, obviously that pile of money is going to grow. But one thing I also want y'all to consider is 8% is really kind of conservative. Yes, there are times where you may lose your money, but in recent history, there's been opportunities to make way more money than 8%. There's an index fund called QQQ. Some people say the Qs or even triple Qs. Well, that's been averaging more than 20% for the last 5 years. Well, we were just talking about 8%. Just imagine what 20% could do over 40 years. That's something that I want y'all to think about. I just want y'all to understand how $500 could possibly get you $1 million. And that's why your first $500 matters. See, it ain't gonna magically make you rich, and your first $500 probably won't change your life, but what you can do with that $500 can. Now, before we talk about what to buy, there's one thing that I want to clear up. You need an investment account before y'all can actually invest. The easiest way to think about this is your investment account is where your investments live. So before we answer what should I buy, we need to answer, well, where am I buying it? And I know y'all probably heard things like 401k, Roth IRA, and then a brokerage account. And I know you sitting there like, fam, I thought we was talking about buying stocks. What the hell are these accounts? See, there's different types of accounts that can hold investments. The first one is the 401k. All it is just a retirement plan that you may have through your job. Some employers may even contribute when you contribute. That's called a match. Then you got the Roth IRA. So that's another retirement account with special tax rule. The advantage with the Roth account is that you have tax-free growth. So when you make that withdrawal during your retirement age, there's no penalties. That's huge. And then finally, we have the regular brokerage account. That's just another type of account where you can use to buy and hold investments. Now, I'm intentionally keeping all of this simple because if I start breaking down every retirement account rule right now, this video is going to turn crazy boring. And I've already made a video breaking down the Roth IRA. If y'all want to check it out, just go ahead and click the video right here. If you're wondering what makes a Roth different, how I think about using one, and why people care so much about using them, just go ahead and watch that after this video. But right now, I just want y'all to remember this. Your investment account is where your investment lives. Now, what the hell do we actually put inside of our account? This is the question that everybody wanted to ask me 5 minutes ago. What am I actually buying? Let's keep this simple for y'all. If you buy stock, then you buy ownership in one company. So if you buy Apple, then you own a tiny piece of Apple. If you buy Walmart, you own a tiny piece of Walmart. Just remember, one stock equals one company. So if you take your whole $500 and you put it into one company, what happens to that one company matters a whole lot to your $500. And that's where investment funds come in. See, you may have heard words like ETFs, index funds, and even the S&P 500. And I know y'all probably wondering like, yo, what the hell is that? But I'm gonna make it simple for y'all. Let's think about this like basketball. See, buying one stock is like saying, just give me one player. Let's just throw Michael Jordan out there. But if you buy an index fund, that's more like saying, give me the whole roster. So like the Bulls. So everybody, Mike, Scotty, Rodman, Kerr, the rest of the team, right? An index fund can spread your exposure across a whole group of companies. So let's take the S&P 500. The S&P 500 is just an index fund, right? That tracks the top 500 companies in America. If you own that index fund, it's going to give you tiny bits of ownership of each of those companies. Think of all of them being individual players and they're all on one basketball team. So imagine it being a basketball team with 500 different players. So where you're going to get the benefit of owning each one of those and how each one of those perform affect the growth of your portfolio. So that's where those things kind of intertwine versus let's just say that you just buy one stock in one company. Let's just say that Michael Jordan is Apple. Well, if something happens to him or if he gets injured, well, that can affect your investment because you put money into just one person. When you invest into an index fund like the S&P 500, well, you lower your risk because that's 500 different opportunities for your money to grow depending on how these companies perform. Some companies are going to go crazy. Some companies are not going to do so well. See, with the index, it actually lowers your risk and that's called diversification. We'll make a whole video about that in the future, but for now, I just want y'all to focus with me. Now, owning an index fund doesn't mean that you can't lose money. You can lose money in any investment. We're not eliminating the risk. We're just trying to avoid putting every dollar on the shoulders of one company or one player. Here's all you need to remember today. Buying one stock is like buying one player, and then buying an index fund is like buying a whole team. That's it. And when I get to show y'all how we invest this money, I'm going to use an index fund for demonstration. So y'all just stick with me. All right, so next step, how do I keep going? Now, this might be more important than actually choosing the fund because once you start investing, you're going to ask, well, when should I buy? And that's a very good question. Should it be today, tomorrow? Should I wait until stocks fall? What if the president says something? Or what if Mercury is in retro, whatever, right? People have weird things for time in the market. But fam, if you're investing for decades, you're not worried about Thursday afternoon. You're going to be investing for the long haul. So these little micro events that happens over time, they really don't matter much. And one strategy you'll hear about is called dollar cost averaging. And don't let that name scare y'all. It's very, very simple. All it means is that you invest a set amount on a regular schedule. Maybe every payday, maybe every month, maybe bi-weekly, whatever. It's whatever works with your finances. That doesn't matter. The only thing that matters is that you continue to be consistent. That's where you'll really start to see your money compound. So the point is to turn investing into a system because if every payday you have to ask yourself, do I feel like investing today? That money's going to lose out every single time. I mean, there's going to be opportunities for you to spend your money elsewhere, right? You got hookah, crab legs, whatever the case may be. If you put that stuff to the side and you focus on investing consistently, y'all will see the growth. So look, but I have a video that already goes way deeper into this. If y'all click the link right here, that's where I break down dollar cost averaging and long-term foundation in much more detail. Y'all go ahead and watch that video after this one, okay? Because right now there's another beginner's mistake that we need to deal with. So let's say you put your full $500 in your investment account and then the next day it drops to 497. And then the day after that, it's like, I don't know, 483. Then the day after that is 475. Well, you panicking. You like, man, I lost $25 in a matter of days. So now you emailing me like, yo, what's going on? So then you panic and then you sell. And then 2 weeks later, it goes back up. And then now you pissed off because now it's at 550. I've seen it time and time and again. So at that 550, now you want to buy back in, but congratulations, you just messed up because now you're buying high and it's selling low. And that cycle is going to repeat itself if you understand that you can't time the market. If you're investing for a long term, you just need to buy and wait. And this is why we make the plan before we press buy, because we know what we're buying and we know why we're buying it. And we know this is money that we're not expecting to double by Friday, which means that we're finally ready. So enough talking, this is the time where I actually need to show y'all how we invest. So we're gonna go ahead and pull out our phones and then y'all just follow me step by step and I'll break this down for y'all. So right now I'm using the Robinhood app. If you don't have an account, go ahead and click the link below or even type it in. And if you guys get signed up, we'll actually both receive a free stock. So for y'all who haven't purchased stock already or don't even have a brokerage account, just use the link and then look, you can get started today. Okay, so on the Robinhood app, on the main screen, you'll see the amount of money that you have in. Once you get in, then the first thing that you want to do is you want to hit the magnifying glass at the bottom. After you hit it on the bottom, this is the screen where you go and you search for different investments. You'll have crypto, index funds, things of that nature. The thing that I want to invest into today is called DRAM. It's a memory ETF. If y'all need me to break that down in the future, I can, but memory stocks right now have been going crazy. Look up MU and SanDisk. Those are two of the best examples. Okay, so I type in DRAM, okay, and y'all want to make sure that you're investing into the right thing. It's Round Hill Memory ETF. I'm going to go ahead and click on it. Once I click on it, we see that it's almost $60 a share. At the bottom, there's a green button and it says trade. You want to hit that button. Then you'll see the words buy, right? That's what we're not trying to do. We want to buy a stock. It's very simple and straightforward. We're going to hit buy, then it'll take you to the next screen. Now, at this part of the video, I want to stop and just discuss something very, very briefly. So on Robinhood, you could buy things in dollars or you could buy things in shares, right? So if I put in an amount of shares that I want, if it's $60 per share, and let's just say I want to buy 10 of them, then I would have to put in $600 to buy all 10 of those. But if you want to buy things in dollars, like the amount of money that you plan on using, like the exact amount, then you just type in the amount that you want to use. So right now we're using 500. So we'll type in 500. So then you want to hit review, and what'll pop up, it says market order. So that means that we're willing to pay whatever the market says this stock is worth right now. It was about $60. That's going to get us 8.3 shares. All right, so we're going to spend our $500. Once we type that in, all we have to do is swipe up. Once you swipe up, it says that you send in the order, and now the order is complete. Boom, that's it. If y'all follow everything that I just did, you just made your first investment. Congratulations, you're now an investor. Like, it's really, really that simple. I want y'all to notice something, because swiping up to buy was the easiest part of this whole video. We didn't need to know everything about the stock market. We didn't need to predict tomorrow or anything like that. All we needed to know was where our money was going, what we were buying, why we were buying it, and what we're going to do after today. See, the hard part ain't pressing buy. The important part is about having a plan before you press it. So I know you're asking, now what, right? We invested the 500. Are we finished? Nope. And then you're going to want to look at individual companies. How do I know if a stock is actually worth buying? That's the next lesson, because pressing buy could take 5 seconds. But if you want to know whether or not a company actually deserves your money, that's way different. But no worries, I already got the video and I want you to watch that one next. But in that video, I'll show you how to start researching a company, how to think about price versus value, and why a stock going up doesn't automatically mean that it's worth you buying it. So you got your first 500 invested. Now let me teach y'all how to actually analyze a company. Y'all click that video and I'll see y'all over there. Peace.